Hi there, I'm Tony from Study Portal 254 and we present to you manufacturing account. At the end of this presentation, ladies and gentlemen, you are required to know the definition of manufacturing account, cost classification, steps in manufacturing, format for manufacturing account, and lastly, preparation of manufacturing account. Manufacturing is concerned with the production of tangible and intangible goods. Firms that produce these goods incur some cost, and these costs are reported in a statement called manufacturing account. There are two major classifications of costs. Number one include direct cost and indirect cost. Direct cost are further categorized to three. Number one, direct material, direct labor, and direct expenses. In summary, direct materials plus direct labor plus direct expenses give us prime cost. The second category of cost is called indirect cost, and they include administrative expenses, selling and distribution expenses, and finance expenses, and many more. In summary, prime cost plus indirect manufacturing cost give us what we call production costs. At the end of the trading period, the factory will need to prepare the following accounts. Number one, manufacturing account. Number two, trading, profit and loss account. And lastly, the balance sheet. There are also 5 steps in manufacturing account, and they include ladies and gentlemen, let us look on how the format for manufacturing account is. Let's begin. The manufacturing account takes the T method. The first feature includes the title that's normally placed in the center of the account. The account has the left-hand side and the right-hand side. We'll first start with the left-hand side of the account. The left-hand side of the account includes the following information. We first start with the opening stock of raw materials. It's added to purchases of raw materials. We add it again to carriage inwards if given. We subtract return outwards of raw materials and subtract closing stock of raw materials. And the resultant figure becomes the cost of raw materials consumed or used. The cost of raw material consumed or used is further added to direct labor, direct expenses such as royalties, and what do we get? We get the prime cost. After that, ladies and gentlemen, we report all the costs or expenses that was incurred by that factory in the manufacture of a given product. And here are the examples of the expenses a factory may incur. Number one, factory lighting. Number two, factory heating, factory insurance, factory rent, factory maintenance, factory indirect wages, factory supervisors' wages, depreciation on plant and machinery, depreciation of factory building, depreciation on factory furniture, depreciation on factory motor van, depreciation on other factory fixed costs. Now, when you add all the factory overhead expenses, you get what we call factory cost. Now, factory cost, when added to opening stock of raw materials in progress and subtracted from closing stock of work in progress, we get what is called cost of production. Remember, prime cost plus the total factory cost plus opening stock of work in progress minus closing stock of work in progress, that is what gives us cost of production. Therefore, ladies and gentlemen, cost of production is transferred to the right hand side of the account for two major reasons. The first reason is to balance off the account. Left hand side of the account and the right hand side of the account must be balanced off with the same figures. That is the number one reason as to why we transfer factory cost if not given the opening work in progress and closing work in progress, or cost of production if opening work in progress and closing work in progress is given. So number two, the second reason is the factory cost is transferred to trading account or cost of production. Ladies and gentlemen, now let's do an example of manufacturing account. XYZ manufactures ceramic cups as his main business. On 1st January 2019, he had 3,000 cups in stock. During the year 2019, he manufactured 100,000 cups and sold 95,000 at 6 shillings each. The following balances were extracted from his ledger on 31st December 2019. And here are the information. The first one is a stock of raw materials given the date 1st 2019 amounting to 11,640. The closing stock of raw materials amounted to 16,280. There was purchases of raw materials amounting to 134,500. There was carriage on raw materials amounting to 41,200. We had direct wages amounting to 92,700. The following were the factory expenses incurred. We had rent and rates amounting to 38,400. Power and heat amounted to 17,200. We had insurance amounted to 15,640. Plant and machinery after depreciation was 150,000. Additional information. Provide depreciation at 10% on plant and machinery. Roman 2. Finished units were valued at factory cost. Roman 3. Factory cost was the same in 2018 and 2019. You are required to prepare a manufacturing account showing clearly the following. Part A, cost of raw material used. Part B, the prime cost. Part C, factory cost of the entire production. Part D, factory cost per unit. And lastly, to prepare trading account for the year. Let's begin. We first start, of course, with putting the title of the account. We start with the name of the company, the type of the account, and the date. At the left hand side of the account, we start with the opening stock of raw materials, which amounted to 11,640. It's added to purchase of raw materials, amounting to 134,500. We add carriage inwards, which amounted to 41,200. The three are added and gives us 175,700. When we less return outward or purchase return, and of which here we are not given, we are given closing stock of raw materials, of which we subtracted that amount to 16,280. We get cost of raw materials consumed, which amounted to 171,060. When cost of raw material consumed or used is added to direct wages, which is 92,700, again added to direct expenses, which here we are not given, we get what we call the prime cost, which here amounted to 263,760. The following factory expenses were also incurred. There was factory rent that amounted to 38,400. We had factory power and heating, which amounted to 17,200. We had factory insurance, which is 15,640. We were not given factory lighting. We were never given factory maintenance. We were never given factory indirect wages, factory supervisors' wages, but we were given depreciation on plant and machinery. And here we need to do some little mathematics calculation. Remember, we were given the initial value or the book value of plant and machinery, which was 150,000. But we were told that the depreciation rate was 10%. Therefore, how do you get the depreciation? It will be 10 over 100 times the book value, which was 150,000. When you do that simple mathematics, you get that the depreciation of plant and machinery amounted to 15,000. And that's how we get the depreciation of plant and machinery. We were never given depreciation of factory building, depreciation on factory furniture, depreciation on factory motor van, and depreciation on other factory fixed. So you only use what you have been given. In this case, when we add all our factory overhead expenses, it amounts to 86,240. But the big question is, how do you get the factory cost? Factory cost, it is the prime cost plus the total of factory overhead expenses. So what was our prime cost? Our prime cost was 263,760. What was our total factory expenses? It was 86,240. When the two are added, the factory cost amounts to 350,000. We are done with the left hand side of the manufacturing account. At the right hand side of the manufacturing account, factory cost is transferred to trading account. There are two main reasons as to why factory cost is placed on the right hand side of the account. Number one, we place or transfer factory cost to the right hand side of the account to help us balance off the account. The left hand side of the account and the right hand side of the account must be equal. The second reason is the value of factory cost will be used during preparation of trading account. Ladies and gentlemen, immediately after preparing manufacturing account, we prepare trading, profit, and loss account. Why do you prepare trading, profit, and loss account? also known as TPL account. Trading account is normally prepared to determine gross profit or gross loss. Therefore, it also first starts with the opening stock of finished goods at the left hand side of the account. Here, our opening stock of finished goods, it amounted to 10,500. We add the factory cost, which is 350,000. Now, this is what was transferred from manufacturing account here into trading account. When the two are added, we get 360,500. When we less closing stock of finished goods, which is 28,000, we get cost of goods available for sale, which is 332,500. And remember, just like I said, trading account is specifically prepared to determine gross profit or gross loss. Therefore, how do we get the gross profit? When sales are greater than cost of goods available for sale, we get gross profit. Therefore, gross profit is equal to sales minus cost of goods available for sale. In this case, sales amounted to 570,000. When we subtract that from cost of goods available for sale, our gross profits amounts to 237,500. We also have the workings of trading profit and loss account. You can have a check on them. In our next video, we'll continue our part 2. We'll still prepare manufacturing account, trading profit and loss account, and the balance sheet, and we will see on how to do the following details: how to treat opening stock of finished goods in the trading profit and loss account, closing stock of finished goods, how to treat work in progresses, both opening work in progress and closing work in progress, and lastly, how to prepare the balance sheet. See you in the next video. Bye bye.